All right, in this video, I'm going to talk about some of the different coverages associated with personal auto policies. So the first thing to kind of note is um, there's sort of a somewhat standardized approach for personal auto policies, and those are ISO um, personal auto policies. And ISO in this case stands for, I think it's insurance. Oh gosh, I'm trying to remember what it was there. Insurance Services Office. Insurance Services Office. I had to double check there. So, Insurance Services Office. So there's sort of somewhat standardized policies, and that's going to apply in most states, not necessarily all states, but in most states. There are going to be a series of parts associated with the policies that generally outline certain specific aspects of the policy, kind of like with homeowners insurance policies. So for part A, this is going to be the liability coverage associated with the policy. So this is coverages associated with, basically you damage some person or individual while driving your car, and so that's what the liability coverage is going to cover. And this will generally apply to rental cars that you wind up getting as well. Part B is going to involve medical payments coverage, and that's going to be covering the insured and occupants of the insured's vehicle. So that's medical coverage for you, not for somebody who is injured in some other vehicle. If they're injured in some other vehicle, that comes under the liability coverage aspect under Part A. Part C is going to be the uninsured and underinsured motorist coverage. So paying or insuring you in the event that you are harmed in some way by somebody else who's driving, who's at fault, and they don't have the insurance coverage they're supposed to have. Part D is going to be sort of what you would normally hear termed collision and comprehensive. So this is going to be damage coverage for damage to the insured's automobile. So it's kind of worth noting that in a typical auto insurance policy, the coverages that are generally required are the liability coverages that protect somebody else that you may hit in their property. So it might, make good the damage that you caused to their car when you knocked the fender off, right? And it would pay for medical payments when they get some whiplash, right? So basically, that's the stuff that's typically in most states required is the liability coverage. You aren't required generally to have the Part D coverage, which is covering your car. So if you don't have the Part D coverage and you cause an accident, you're in an at-fault state, so a state where the fault matters, and you wipe out the other person's car, liability coverage is going to kick in. Hopefully, you have enough coverage to pay for the damages to the vehicle. But your car, whatever damages it has and has sustained, that's just up to you to deal with, unless you have collision and comprehensive kind of coverage. So, and then that's under Part D, and that's covering basically damage to the insured's automobile. Now, if somebody else hit you and it was their fault and you're in an at-fault state, their liability coverage should basically pay for repairing your vehicle. And so there, if you had collision and comprehensive in that case, then basically it would turn into a situation in which either you would appeal to the other insurance company for the other driver who caused the damage and ask them to pay for the damage to your vehicle, or if you had collision and comprehensive, you could get your insurance company to pay to fix it, and then your insurance company is going to seek reimbursement from the other driver's insurance company. Now, to add a little bit more detail for that Part D coverage covering the insured's automobile. So again, that's the kind of the collision and comprehensive kind of coverage. If you have financing on a vehicle, you are generally going to be required to have collision and comprehensive because the vehicle is the collateral for the loan. And so the lender is generally going to require that you have collision and comprehensive coverage on that vehicle to protect the lender's financial interests in the vehicle. Now, that collision and comprehensive coverage may not necessarily cover a rental vehicle. So you generally, your liability coverage is going to cover the liability that you would have if you rented a vehicle, but it wouldn't necessarily cover the collision and comprehensive. So that's something to be very mindful of, and that's actually why sometimes rental agencies will offer coverage that you can purchase when you rent the car. But it's also worth noting that some credit cards may have a benefit covering a certain amount of damage to a rental vehicle. So you'd have to check with your credit card company and find out if they have a benefit that if you purchase or rent the car paying with it with that credit card, that you get some collision and comprehensive coverage on the rental vehicle. So that's something to investigate. And under that Part D coverage is also going to be loss of use coverage. So if your car has been damaged in some kind of an accident or hailstorm or something like that and is being repaired, then in some cases that your collision comprehensive coverage will reimburse you to rent a vehicle while it's being repaired, that kind of thing. Sometimes there are roadside assistant options that are available. Generally speaking, personal property in the vehicle is not covered, but it probably is covered under homeowners insurance policies. So generally, the auto insurance policy is covering the automobile and your liability coverage. Okay, so for Part E, this is going to detail your duties after an accident or loss. So obviously make sure you're physically okay if you're in an accident. But generally, I mean, you're going to have to report this as swiftly as possible. You're going to have duties associated with, basically reporting it to the insurance company, making true and accurate statements, documenting the damage. It's not a bad idea if you're in some kind of an accident or even a small fender bender to take pictures of all the vehicles involved and where the cars were and things like that. And as a general principle, it often makes sense to get the police involved, get them to write up what happened and figure out who was at fault and so forth, because then you can actually use potentially use that as well. This is this is who the police thought was at fault for this. It also is worth noting that when you are interacting with insurance companies in the wake of an accident, it's generally not a good idea to say something like, "I was at fault." What you would want to say instead would be just what happened to the best of your understanding. So just explain, I was driving here, they were driving there, this person turned, I turned, the light was this color, et cetera. Specify all the facts as accurately as possible. But generally, you don't want to say things like, "I was at fault." There may have been other factors involved that you're not even aware of. That could affect who was actually at fault. For all you know, the other person's brakes could have been shot or something like that and caused them to get in an accident with you. Who knows? So again, Part E is going to specify the duties after an accident or loss. Part F is going to have general provisions associated with the policy and so forth. Now, the requirements do vary from state to state. So different states are going to have different requirements and different minimum coverages possibly. Some states there are some states that are at fault states, some states that are no fault states. And so if you're looking at a no fault state, then in that case, basically what's going to happen is your insurance is going to pay out, pretty much regardless of who was at fault for that. So from that standpoint, there are a few states where the fault does actually doesn't matter, and there are most of the states that who is at fault does matter. So that's something to kind of be aware of. Okay, let's see here. There are a couple different ways that some of these policies can be can be set up, and those can be kind of a split limit or a combined single limit policy. So a split limit has kind of what was described in a prior video, like 100, 300, 100 thing where it's 100 per person, $100,000 of coverage per person for medical costs, $300,000 per accident for medical costs, $100,000 of property. That's the idea behind like a split limit kind of a scenario where it's actually categorized. But you could also have a combined single limit policy in which you basically just specifies it's going to pay out this maximum amount in some sort of payments, and then that's it. And so obviously the split limit is potentially more restrictive, and you could exceed some of those limits a little bit more easily. And that's something to be mindful of. The last term or piece to kind of throw in here would be subrogation. So subrogation is basically when you're giving over the rights to go after the other insurance company when they were at fault. So here's kind of how that would work. If you were in a car accident and it was the other driver's fault, then your medical costs and damage to your vehicle, which resulted from the accident, are the other person's responsibility, basically. Now, if you have collision and comprehensive coverage on your vehicle, then basically what's going to happen is if you are needing to repair your vehicle, you could work with your insurance company to repair your vehicle and through your existing collision and comprehensive coverage. But if your insurance company is paying for that repair, then you have to give over to them the right to get reimbursed from the other insurance company or from the other driver. So basically, you can't get reimbursed twice. You get to get made whole once in terms of the damages associated with that. And then your insurance company could go after the other insurance company for them to get made whole because it was the other person's fault. Or you could just go straight to the other person's insurance company if you think that would be easier and more straightforward. So that's something to be mindful of. Basically, you're only going to get paid once, so it's just a question of kind of who you're going to get paid from potentially. But that's kind of the idea behind the subrogation. Okay, hopefully this video has been helpful. Thank you so much for watching and have a great day.